Now, to start the session, join me in welcoming Mark Eramo, Co-President and Global Head of Fuels, Chemicals, and Resource Solutions at S&P Global Commodity Insights, who will deliver a teaser presentation on the topic of making the next quantum leap, drivers of chemical industry's future for the next 10 years. Let's dive into this important session.
Thank you for the introduction. Your Excellencies, senior executives, ladies and gentlemen, it's certainly my honor and pleasure to participate in the 18th Annual GPCA Forum and to help lead this session alongside two very distinguished chemical industry leaders. I'd like to start off by saying congratulations to Dr. Sadoun and the GPCA staff for organizing yet another very successful GPCA event here in Muscat, Oman. I really enjoyed watching that opening video. As I began my career in the petrochemical industry in the mid-1980s and watching this region develop and grow into the sizable industry that it is and the contribution that it makes to the industry has been quite a sight to see and to be a part of. I appreciate the opportunity to open this session with some thoughts from S&P Global regarding the key issues that face the chemical industry in the coming years. For decades, there's no doubt that the chemical industry has overcome numerous challenges as it has provided the world with essential materials and engineering solutions to advance the human condition and to enable the world that we live in today. So I'll spend the next 10 minutes just giving you a few thoughts on a variety of issues that we see that are from fundamental changes that are currently happening in the energy markets to the transformational changes that are happening in China, now a major player today, and certainly that will be a major player in the future. I will share our views on these major issues and what we believe will persist for the coming decade. There's no doubt, as I said earlier, that the chemical industry has faced and continues to face a growing list of challenges, creating more complexity and more uncertainty for future planning. And I would say that what I like to call in this era of climate change, the complexity and uncertainty of future planning has certainly hit a new height in terms of what the companies are faced with in terms of making the investment decisions that they have to make. If you take that myriad of issues that I showed you on the previous slide that was influenced from geopolitics to technology to emerging AI, to a variety of traditional issues of supply and demand and trade, we would boil down some of the key fundamental challenges that the industry faces into what you see on the screen now. Geopolitical turmoil wrapped up with energy volatility and uncertainty, end-use market growth. When will markets begin to develop from a low-carbon perspective? What will be the growth industries that will drive the industry forward? Renewable feedstocks of choice, and can renewable feedstocks come on at scale in terms of meeting this low carbon future? The technology and innovation that will be required, or that exist already today waiting for market acceptance, and more importantly, consumer acceptance. Global supply chains that are shifting, have shifted, will continue to shift with changes in geopolitics, changes in energy dynamics, and changes in where concentrated amounts of capacity come on stream. Plastic circularity is certainly first and foremost, as plastics make up nearly 50% of the total demand for basic chemicals, that this fight that we have against plastics waste and the development of circular plastics business models is critically important. And then carbon markets and achieving net zero, certainly. This is one of the themes that has certainly emerged in the last 5 years. This is not going away, as many investments are now underway in terms of achieving a reduced carbon profile or even net zero objectives. So let me pick up on the energy theme that I talked about in terms of energy volatility and issues that face the industry. A simple plot of the blue line being the Platts Brent crude oil price going all the way back to 2014 on a daily basis, versus a basket of Platts Global Petrochemical Index, a basket of prices that we track on an ongoing basis. Again, these are daily prices that go back to 2014 through year-to-date 2024 numbers. You'll notice in history the separation between the petrochemical prices and the crude price. There was always the ability for the industry during that time period in order to move in conjunction with the lowest cost or the highest cost increment that was coming to the marketplace to move prices to where some degree of profitability could be maintained. Certainly, the period from 2021 to 2024 on this graph represents a significant and fundamental change that the market has been facing for a number of years, and it's just a period of oversupply. That oversupply has created a downward pressure on pricing, which has been discussed already in this forum, while crude oil prices have continued to push costs higher. And so this collapse in that spread places incremental pressure on assets that rely on naphtha chemistry, if you will, in order to provide the products to the marketplace. This is a challenge, a traditional challenge that the industry has faced for many years. But now couple that with incremental investment decisions around decarbonization, and the industry finds itself in an even more difficult and uncertain position as it looks at a very difficult time of oversupply, low profitability, but yet the need to make these investments in order to meet low carbon commitments. A quick look at the S&P global view of where we see energy trending in the near future is shown on the screen now. The gray bars represent our forecast for Brent crude oil pricing. The purple line at the top, Northeast Asia naphtha, and at the bottom, U.S. Gulf Coast gas and ethane prices. That, again, that separation that you see existing today and then into the future accrues an advantage, if you will, to low-cost regions, North America, the Middle East, based primarily on gas-based chemistry, versus those regions that are based on naphtha chemistry. Will this trend continue into the future? Will crude prices stay high, placing that upward pressure on prices, putting more and more pressure on those assets around the world that, again, are faced with decarbonization investment decisions? Our fundamental view and balances say that, yes, we're going to see a sustained higher crude oil price, and certainly there will be volatility around that base number that you see in our forecast. And it is those volatile times that create the opportunities or the challenges for different producers in different regions. I'm also reminded of looking at a forecast that looked very, very similar to this back in 2012 and 2013. And we all see what happened in 2014, 2015, 2016. Point here being that volatility in energy prices is one of those ongoing challenges that will not also go away from a petrochemical perspective. You really don't need me to describe the oversupply situation that has taken place really in the last 4 years in the petrochemical industry. On the left-hand side, the graphic shows by country, by region, the total amount of what we call some basic petrochemicals that have come on stream from 2019 in our forecast through 2029. I'll draw your attention to the period from 2020 to 2023, where the acceleration in new capacity accelerated in total above 30 million metric tons per year, which was unprecedented. We see it coming off of that high level going forward, but we sit here today in an oversupply situation that will take some time to work off. On the right-hand side, you see the similar view from country standpoint, same chemicals, but from a demand growth perspective. Having been in this industry for many, many years, that level of demand growth that you see, I'll say it's not bad. It's a multiple of GDP, which is typical for basic chemicals, but it's certainly not enough to overcome the strong wave of petrochemicals that came on, dominated by China, as you see in the red bars, that happened in that period from 2020 to 2023. So this becomes an ongoing challenge that the industry has to face again while trying to balance the issue of capital investment in traditional assets while it tries to face, in this era of climate change, how do we decarbonize going forward to create a low carbon product. In terms of where we will see the asset profile going forward, we like to talk about, at a very high level, investment decisions being driven by some key strategic drivers. Where can I find an energy and feedstock advantage? Do I have access to world scale technology? Do I have a capital advantage in terms of building these assets? What does my access to markets look like and trade routes? Do I have a domestic market or am I trading all of my product? How do I leverage an integrated position, refinery petrochemical integration, or other forms of integration into downstream markets? We would argue today, and as you look forward to the next 10 years, providing effective carbon management will also play a factor, and a key factor, in the decision-making of locations for new assets in the petrochemical industry. This graphic here shows the myriad of basic petrochemical assets around the world that have been built up with billions of dollars of investments over decades of time in terms of what the profile looks like today. If you think about the next 10 or I'd say even 20 years, how will this myriad of assets change? Where will the clusters pop up based on this fifth element of carbon management? What areas of the world not only offer the advantages to me in terms of CapEx or cost, but also enable me to provide effective carbon management to get to a low carbon product of the future that the market seemed to be calling for. It's hard to talk about any commodity market without bringing up what's happening in China. And a myriad of changes are underway. And I think about my time in the industry and where China was in the mid-1980s and where it is today. I like to say that the chemical industry in China has scale and it has global impact. What happens in China impacts everybody around the world. And it's highlighted there as a number of issues that are underway in terms of whether it be self-sufficiency or a continuation of the CapEx advantage that exists within China. Also questions around domestic demand growth and therefore turning to more and more exports. One of the trends that I like to watch when it comes to understanding what's happening in China is just the simple balance of trade on either an equivalent basis of basic petrochemicals. In this case, the graphic on the right-hand side, the red bars represent the amount of ethylene equivalents, whether it be derivatives, ethylene contained in derivatives, or whether it be monomer itself, that China has imported since 2010. And you can see the buildup through 2020 to nearly 30 million tons of ethylene, and then the sharp correction of almost 10 million tons. And when I see that correction, what I think about is the millions of tons of assets that were built in certain parts of the world with China in mind. The millions of tons of assets that were built anticipating that that trend would have stabilized at a high level or continued to rise. But now we see that correction. And so will it continue to go down with increased self-sufficiency, or will it actually turn back up in terms of what we see happening in China? But there's no doubt that understanding and seeing what's happening from a China market perspective is critical to all phases of the industry. Energy transition, more than just a buzzword, energy transition is real. The world has been transitioning energy for decades and decades. But now we're focused on fossil fuels. We're focused on the transition away from hydrocarbon fuels primarily in terms of what it means to the industry. This has implications for petrochemical feedstocks for the chemical industry. Different perspectives are resulting in various tensions with policymakers and companies. Policymakers, I like to say, are seeking that right mix of incentives versus penalties, while companies are looking for new business models that will provide solutions that are sustainable, not propped up by an incentive, but actually sustainable solutions. That means that they will persist well into the future without some type of subsidy. And so there is this natural tension that evolves when it comes to energy transition and the policies that we see evolving really in all parts of the world. There's no doubt that companies are focused on energy transition. They're focused on achieving a low carbon footprint or a net zero footprint. And the technology does exist today. And we see a wide variety of technologies now being added to that traditional view of oil and gas flowing into a refinery petchem complex and used to make transportation fuels and chemicals. We now see a whole variety of options, whether it be reuse of plastics waste, biomass, and greener feedstocks, renewable gas and power. You'll hear from Jim shortly on the possibility of modular nuclear within a chemical plant. We see the use of carbon sequestration, hydrogen, which has been around in the industry and swirling around refineries, again, for decades, but now taking on a new meaning in terms of its value when it comes to hard-to-abate sectors of decarbonization. Further integration into petrochemicals and plastics also as a means of lowering carbon intensity going forward. So the technology is there. Investments are being made in this energy transition, and efforts of decarbonization are definitely underway within the industry. And so, in summary, we see these key issues driving things in the next 10 years. That's what the theme of this session is about. So energy transition and sustainability, how we tackle the greenhouse gas emissions. Digital transformation, we'll have some conversations about that, the role of AI, both as a demand center as well as helping us from a technology development standpoint. This tension of globalization, 60 years of global trade, now focused on nearshoring, reshoring, possibly nationalistic type attitudes from different countries around the world, including the United States. Innovation of specialty chemicals, so when you look at healthcare and electronics, automotive and renewables, how do we see technology and product developments that will result in lower carbon products that consumers will accept, which become a key? And so as I started off my conversation, today's challenge of climate change and its link to greenhouse gas emissions is an added complexity for downstream investment considerations, refining or petrochemicals, as the industry balances environmental, societal, and economic benefits and objectives. And again, for decades, the industry has brought solutions forward, caring for the environment, taking care of society, advancing society, and at the same time providing the economic development for growth around the world that this industry does so well. And so as we look forward, one of the things that we like to say in terms of finding solutions is you have to trust the technology that will get us the solutions that we need. Allow the market to adopt that technology and consumers to look at accepting whatever changes they will need to accept in terms of the products that they consume as they understand their role in helping with the greenhouse gas emissions. And we need informed policy and regulations because over time, I would argue if you look back at the most successful advancements of this industry, that it has achieved the most significant advances in success when these dynamics were all working in unison and not against each other. So again, I'm really honored and pleased to be able to open up with some opening thoughts. It's now my pleasure to welcome Jim Fitterling to the stage to give you some thoughts from Dow. Thank you.
Thank you, Mark. Good morning, everyone. Assalamu alaikum. I want to, before I begin, I just want to say thank you to Abdul Rahim Al-Faqih from SABIC, who's also the chairman of GPCA, for the invitation to be here. And a special thanks to Dr. Al-Sadoun for the invitation to be back at the GPCA Forum, but also just for the fantastic representation that he gives this region and the industry on the global stage. I've had the opportunity to work with him through ICCA, through a number of different things, including these negotiations for a global plastics treaty. And I just want you to know how well respected he is, how much wisdom he brings to those proceedings, and how fortunate you are to have him represent GPCA. It's my privilege and honor to be here alongside all of you, such esteemed dignitaries, obviously renowned business voices in this industry, and students and young professionals who are always here at GPCA who will be the next leaders of our industry. We're here today to talk about the industry's future, but first I want to take just a moment to talk about the past, specifically the parts of that past and historic partnerships that make this region so important to Dow. Many of you here know that we've been present in the Middle East for almost 50 years. We've invested in the region and its people. It was nice to hear Sheikh Nawaf's comments this morning. In total, our joint ventures in this region exceed $30 billion of investment, and we've hired and trained well over 1,000 operators and engineers to support our local footprint. We've continued to provide this region's customers a broad range of solutions across packaging, building and construction, infrastructure, and energy end markets. And through other ambitious projects like our state-of-the-art innovation center at KAUST in Saudi Arabia, we're advancing innovations that will shape our industry's future. Thanks to our collaboration with the GPCA, the expertise of many of you in this room, and the partnership of our industry peers, as Mark said, I think the future is bright for our industry. While we may talk about our industry in decades-long time frame and horizons, in many ways the changes that will define the next era are already in motion. Take sustainability, for example. Discussions around sustainability are happening in boardrooms and dinner tables all around the world. And as a result, we have to continue to adapt to this fast-changing market dynamic while maintaining profitable operations and efficient production. And let me just highlight two of the shifts that are top of mind for us. First, the energy transition is here, and it's here to stay. Our industry is facing a dual mandate. We must decarbonize our manufacturing assets while increasing our capacity to serve growing customer demand. Second, public sentiment is shifting to put circularity front and center. Demand for plastics is increasing, and it's up to us to meet that growing need while ensuring that plastic products do not end up in the environment. Adding further complexity to these challenges, each country is in a different place on this journey, and they're all seeking solutions at varying rates. Our paths may be distinct and our strategies may diverge, but we're all headed to the same place, a circular, net zero carbon emissions economy. In moments like this, where the future's in question and the challenges before us seem enormous, our industry has the opportunity to do what it always has done: build a better future. So let's start with the energy transition. To level set, despite what some people outside this room might say, we still live in a fossil fuel world. In fact, the world has never used less of any energy source, not wood, coal, oil, natural gas, nor wind or solar. And with electricity consumption projected to increase 2 to 3-fold by 2050, driven in large part by the rise of AI, the demand for energy will continue to grow. At the same time, the global push for decarbonization is accelerating. These are two tectonic shifts that are on a path to convergence, and the way we navigate them will shape our future. At Dow, we're taking action to become carbon neutral, to remain competitive in a net zero economy, and to fuel our growth for the future. And we're demonstrating that delivering a low emissions future isn't just possible, but can be profitable. We've outlined a clear path through a strategy that we call Decarbonize and Grow. This roadmap includes replacing end-of-life assets with high-efficiency, low-emission assets. By 2030, we plan to grow our underlying earnings by more than $3 billion while reducing our greenhouse gas emissions by 5 million metric tons. This isn't just an aspiration or an optimistic projection. We are putting shovels in the ground today on projects that will drive growth and reduce our carbon emissions for the future. In Alberta, Canada, we started construction this year on our Fort Saskatchewan Path to Zero project, which will be the world's first ethylene and derivatives complex with net zero Scope 1 and 2 emissions. The project includes creating a new 2 million ton ethylene cracker and retrofitting our existing 1.5 million ton cracker, both of which will be powered by the hydrogen that's produced from the byproducts of the crackers. This will result in an increased polyethylene capacity at the site by 2 million tons annually, and we will do that while reducing 1 million metric tons of actual CO2 emissions from the environment annually. When complete, the site will produce 3.5 million metric tons of ethylene with zero Scope 1 and 2 emissions. That will be 20% of our global capacity. That is the industry's largest hydrogen and carbon capture project to ever FID. At full run rates, we expect the project to deliver over $1 billion of underlying earnings growth annually, and that's before even considering the price premium that customers will pay for the CO2 value capture in our products. It's worth noting that we chose Canada as the location for that investment for a few reasons. One, we already have a world-class facility there that has been operating for more than 60 years. That's in addition to access to low-cost natural gas feedstocks, nearby existing carbon capture and storage infrastructure, a market price on carbon, and tax credits that incentivize the investment and innovation around the hydrogen capability. I bring that up because this type of project simply isn't plausible in many other markets. That's why it's so important that governments around the world embrace an all-of-the-above energy strategy. There's no question that renewables will continue to play an increasingly important role, but what some people outside the room fail to realize is that it's going to take low-cost, reliable baseload solutions to power the energy transition. That means natural gas, carbon capture, all forms of hydrogen, and nuclear. With that in mind, as Mark mentioned, we're working with a company called X Energy to deploy small modular nuclear technology at our operations site in Seadrift, Texas. That project will be the first of its kind. It will deliver safe, reliable, zero emissions power and steam production, and it will decarbonize the power and utility needs for an entire site. To reach our emissions target, we need to invest in more decarbonization projects around the world. But in many countries, the environment and the policy environment makes it too expensive, too burdensome, and too unpredictable to commit to these types of transformational investments. When policymakers take it upon themselves to decide one type of energy is right and another type of energy is wrong, rather than asking what is right for each unique situation, that's when progress stops. At that Texas site, with small modular reactors, we will be able to power the entire site with 4 80-megawatt reactors on a small plot of land adjacent to the facility. The inherent safety of the X Energy technology is a major advantage. By contrast, a 1 gigawatt light water reactor would require a much more significant investment and a safety zone with a 7.5-mile radius. And thinking again about our hydrogen carbon capture project in Canada, if we had to do that with green hydrogen rather than blue hydrogen, it would require 7 gigawatts of electricity. That's the equivalent of 7 traditional light water reactors, or more than 20 million solar panels. That's not to mention the enormous water consumption it would require, an issue which I know is top of mind for many of you in this region. Fresh water demand is projected to outstrip supply by as much as 40% by the end of this decade. So we need to take a holistic approach to our resource usage when we think about the energy transition. The bottom line is that even as we set ambitious goals and embark on audacious projects, we can't let the pursuit of perfect get in the way of progress. We all share a responsibility to help governments get these policies right. And that means playing a leading role in shaping these discussions rather than being shaped by them. Another area where we need to get policy right is to create the future that we all want, it's an equally important issue, and that is plastics. Plastics are essential to our modern world. They lightweight our cars, they increase fuel efficiency, they prevent food from spoiling, they deliver the wonders of medicine, they make everyday items affordable and accessible for people of all income levels. Demand for plastics is on the rise because they do all of that, and they do it with a lower carbon emissions footprint than essentially any of their plausible alternatives. Despite all of this, increasingly, the issue at hand is not what plastics do, it's where plastics go. No one wants plastic waste to end up in the environment. But with 3 billion people around the world who lack access to basic waste management, all too often that is exactly what happens. Let me be clear. It isn't because plastics were created that they end up in our environment. It's because they aren't properly disposed of. Globally, less than 10% of plastic is recycled, and approximately 1/3 of plastic packaging escapes collection systems. Underscoring the urgency of this situation, few countries yet have even individual goals in place to limit or reduce plastic waste, let alone a unified strategy to overcome this global challenge. That's why the Intergovernmental Negotiating Committee was formed. The Dow team was in Korea this past week, 10 days, where the 5th INC negotiations were held. And it is true that we've never been closer to a legally binding global agreement to end plastic pollution. There is strong support for a solution that will eliminate plastic pollution from our planet by creating a socially inclusive circular economy. But during the negotiation process, the focus of some parties moved from developing a treaty to end plastic pollution to trying to end plastic production. In Korea, we made it clear again that it's unrealistic to think that we can simply ban our way to progress. True sustainability goes beyond supply levels, and we must consider an all-of-the-above approach. That includes designing with circularity in mind, driving demand by setting recycled content mandates, changing behaviors by encouraging countries to adopt recycling targets, enacting extended producer responsibility policies, ensuring transparency, accountability, and external reporting against our stated goals, and building public-private financing and risk models that catalyze investment. With collaboration and commitment from all stakeholders, a circular economy for plastics is within reach. But Dow isn't waiting for a global starting gun to begin the race toward zero waste. We're working to transform plastic waste and other alternative feedstocks to commercialize 3 million metric tons of circular and renewable solutions annually. With customers and brand owners constantly setting more ambitious sustainability targets, we believe that circularity can be a growth driver, generating an anticipated $500 million of incremental run rate EBITDA by 2030. Around the world, we're working with more than 20 partners to deliver circular economy solutions. That includes the collection and sorting of waste in Kenya with Mr. Green Africa, the construction of multiple world-scale advanced recycling facilities in the United States and Europe with Mura Technologies. But we need more examples from both business and government And we need to combat this notion that recycling doesn't work, that success will come from elimination rather than innovation. Because for a vast majority of the world, it's not that recycling hasn't worked, it's that recycling isn't available. This is just a glimpse into some of the challenges we'll be faced with over the next decade. I haven't even gotten into the full implications of the AI revolution, the digitalization of our industry, or the shifting consensus on global trade that is happening around the world, and I'm sure we'll talk with Mark about that shortly. Of course, oftentimes the greatest obstacles are the ones we can't even see yet. But we know that once we identify a problem, we can engineer a solution. It's the very nature of our industry and our people. We change the composition of materials to make them stronger, more resilient, and purpose-built for the future. And we can do the same things for our businesses. We know what society demands and what the world wants and where it's heading. If we act now and we act with urgency, we can usher in a new era of progress, ensuring a sustainable, productive, and profitable future. Thank you.
To the podium, Dr. Ilham Kadri, the CEO of Syensqo, to make some of her opening remarks.
Thank you very much, Mark. Assalamu alaikum wa rahmatullahi wa barakatuhu. Your Excellencies, ladies and gentlemen, I would like to thank Dr. Abdul Wahab Sadoun and Abdul Rahman Al-Fakir for having me here. It's a great privilege and great honor to be back in the region I lived in for a few years with my family, and I had the chance to discover not only its beauty, its history, but also the friendship and the values this region represents and carries. And I would like also to thank our many hosts for their hospitality in this beautiful country. Ladies and gentlemen, as most of you know, probably, I'm a chemist by background, and I was lucky in my life to find my passion at young age when I understood that chemistry, it was the thing I wanted to pursue, and I'm gonna tell you why. Because without chemistry, there is no batteries. Without chemistry, there is no green hydrogen. Without chemistry, there is no insulation material, no aviation, no shipping, no recycling, no circularity. Indeed, without chemistry, there is simply no energy transition, which is very crucial, as you heard it from Jim, for the future of the world. Listen, I'm gonna repeat probably what Jim said in my words. Carbon is not the enemy. Plastic is not the enemy, but it's rather how we use them, how we collect them, how we recycle them, how we reuse our products for a second life, and how our chemists are gonna use the Mendeleev table differently in this future, near future, to reinvent chemistry and use circularity by design. And I dare to call chemistry is the mother of all industries. Of course, I'm biased. That said, our sector is profoundly changing, as Mark mentioned in his opening remarks, experiencing a production shift from the west to the east. As you can see, the chemical industry in Europe has been facing its biggest downturn in history. In the 90s, the European chemistry represented a third of the global chemical production. Look at this, compared to just 13% last year. The shift away from Europe, for example, has several reasons. Obviously, the energy costs and the carbon pricing in Europe have become far higher compared to the United States of America or China or Middle East. And this is the same situation in the US, where the market share went from 25 to 11%. And production shifted away from Europe and the US to regions like Middle East and mostly China, which now produce close to half of the chemicals worldwide. And for the declared carbon neutrality ambitions, the International Energy Agency tells us that investments in renewables needs to triple. I think it should be more if we want to reach these goals. So the next game plan will be on energy, which is the industry's lifeline. With further demand, Jim said it, for Gen AI, for advanced connectivity. Sorry, I lost my connection. It's advanced connectivity. So for advanced connectivity, and the world will need more energy with a higher share in clean ones. Another explanation of the shifts from west to east is the change in trade and regulation landscape. The European chemical industry is faced with what we call that triple transition: the green, the clean one, the digital, the AI one, and the just, leaving nobody behind. This is possibly, in my 30 years of industry experience, the biggest challenge ever faced by our industry. And we will need to deliver this change within the next decade to reach carbon neutrality as early as 2050. And this challenge is exacerbated by increased regulatory pressure in Europe. Red tape, bureaucracy are the biggest competitiveness issues in my continent. But of course, regulatory, along my 30 years of experience, had been and can be good for industry, just as competition is a good thing to create an environment of innovation. As long as there is a level playing field between every region of the world and amongst industry players. Finally, we cannot talk about the industry challenges in Europe without talking about trade. And while we remain committed to free trade and openness, we must also acknowledge that the World Trade Organization is not functioning as it should. We are faced with overcapacity in China, while we expect some markets like the United States of America to further close down on imports, adding pressure into the EU and to China. And not only is this trade aspect undermining the competitiveness of the European chemical industry, it's also exacerbated by geopolitical tension in a time when each region in the world is trying to secure critical minerals and chemicals for strategic supply chain like batteries, renewables, and digitalization. And given the current landscape our sector is evolving in, I will dive into 3 topics, obviously using my own company roadmaps, that I found very crucial in our industry for the next decade. Obviously, sustainability, innovation, and regulation. Let me first say a few words about my company, and maybe some of you wondered, who is Syensqo, Ilham? Sometimes how to spell it. We are a young science company, almost a year old. We emerged after the split from the 160-year-old Solvay Group last year as a global specialty chemicals and advanced material company. And with our employees, our goal is very simple, is to disrupt in the development of the next generation of chemicals, of materials that can address some of the most pressing issues humanity is facing, reducing emissions, enhancing energy and resources efficiency, enabling the circular economy. How we do that? Through research and innovation. This is at the core of our business model. Concretely, we solve complicated problems in attractive higher growth markets. We take commodities, we take raw materials, and we make highly differentiated solutions to cater our customers' needs and unmet needs. Just a few examples. We are in 85% of the flying vehicles in the sky. We are in 1 out of 2 EV cars in the world, including separators for EV batteries. We have solution for 80% of the green hydrogen technologies, electrolyzers or fuel cells. About 1/3 of the world's copper is recovered using our chemicals reagents. 90% of the advanced chips have Syensqo inside. And all in all, maybe more relevant to this region, we are promoting non-metallics. For example, the weight of a car just can be actually reduced by 25% while improving its power through non-metallics. Just in a case, battery case, for example, moving from metal to non-metallics offers up to 40% weight reduction and a lot of greenhouse gas emissions reduction. Our creation are not only limited to mobility or connectivity, we are also curious about how nature itself can inspire the way we do chemistry. And I truly believe the younger version of me, if I had to become a chemist again, I will do chemistry and biology. We believe there is a blurring line between the two sciences, and that's what we do at Syensqo with our biotech platform, with ceramides, with guar, with the rice husk, so we are recycling a waste, with rosemary extract in Morocco and biofermentation processes. And I've said this many times in my career, we have to be sustainable and profitable. The and is important, and we can be, by the way. I remember when I joined Solvay back in 2019, they told me this is impossible. We were actually lagging Paris Accords, and we joined Paris. We cut twice the Paris goals in just 4 years, more than what any of the employees could dream of. And now success comes with success. It's contagious. We are targeting at Syensqo carbon neutrality by 2040, and we know we can do it profitably. We implemented, since I joined the company, an internal carbon pricing, which we don't have globally. And that helps us, actually. From the right pocket to the left pocket, taxing ourselves helps us to really develop our muscle. We have now 47 energy transition projects around the world to reduce greenhouse gas emissions. We created an ESG committee at the board level. Our board has skin in the game and integrated sustainability metrics in the way, like financials, into our own performance criteria, into our incentive system. It hits my pockets and the pockets of the company. And of course, the people pillar is equally important. And recently, we committed to a minimum living wage to all employees by 2026. Moving on to product innovation to reinvent chemistry in the next decades, the picture you see on the left is the very recent gathering of our scientific advisory board in Shanghai, where AI modeling for new chemistry was at the core and the center of the discussions. In fact, in my company, we see a 20-time acceleration in time in our capacity to screen new molecules, new materials before selecting the handful ones, we wanted to test. We are going to reduce long years of development to few months, unlike when I was younger at the bench. Another example of product innovation is Climate Impulse, the groundbreaking project led by the explorer Bertrand Piccard, and we are his main technological partner, aiming to achieve a non-stop emission-free flight around the world in a green hydrogen-powered plane. Amazing, isn't it? The projects involve some, very difficult technological innovation requirements, including maintaining liquid hydrogen at -250 degrees C for 9 days and with no leakage, and developing advanced material composites, thermoplastic composite materials, which will make the plane, the aircraft, lighter. But let's not be mistaken. At the end of the day, it's all about people and people and people. We need STEMs, we need science, technology, engineering, and math, youth, and diversity, by the way, amongst the youth to join us. We need this curriculum to change compared to my times, right? To change because it needs to include AI, circularity by design. And that's the reason why we partner all around the world with leading universities. You might also remember the Solvay conferences for the chemist or the physicist in the room. Our founder, Ernest Solvay, launched it back in 1911, and it was about gathering the great scientific minds at the time. And I named a few of them, my obviously role model, Marie Curie, but also Einstein, the second youngest in the room, Lorentz, Poincaré, Planck, and I could go on. The picture at the bottom shows the young STEM talents from global universities in the same formats, because we try to make chemistry sexy, appealing. We want more to join the chemical industry. And the Ernest Prize recognizes brilliant innovators and achievers. Last year was Omar Yaghi, a son of the region, by the way. He's from Jordan, working in Berkeley University, and he was recognized for his groundbreaking contribution in the development of MOFs, those metal organic framework. Now to conclude, we cannot do it alone. And Jim said it very well, our chemical industry will not transition and thrive without the authorities by our side. We need each other to achieve our climate ambition. Industry provides the affordable innovation needed for the transition, and government should provide a stable, simple regulatory environment with a level playing field conducive to commercializing next generation of innovation. Along with the CEFIC and many members present here today, more than 70 CEOs gathered in Antwerp in February this year. And we were very proud to have brought the Antwerp Declaration to the EU President Ursula von der Leyen. We are now 1,280 signatories, never done before in the history of the industry, which shows that this declaration is a real call for action. It reiterated and it reiterates that competitiveness is not negotiable. Now the Draghi report is out for Europe, and we need it in full. And I would like to conclude on a positive note, on hope. If we look at all this trade landscape and the buzzword tariffs, right, between the EU, the US, China, the EU, and so on, there is a huge opportunity for this region, for the Gulf region, for companies like mine to join forces with the Gulf region. Many Gulf countries have already adopted the net zero roadmaps and have embarked on a transition journey, including downstream. Look at the ambitious NEOM project. It involves green hydrogen, blue ammonia, clean mobility, industry 4.0, and so on. We have our self-joint venture in the United Arab Emirates in Al Ain, dedicated to the production of composite products for aerospace, and I love it because 52% of the workforce are women. We're also working closely with the Kingdom of Saudi Arabia to accomplish the Vision 2030 and its transition roadmap with innovative non-metallic solution. So in a world of shifting trade, geopolitical dynamics, which we don't own, we don't control, we need to find those strong allies, and it's crucial to advancing our shared ambition. So as I stand before you, I'm convinced that chemical companies have a vital role to play in this region. Together we can drive innovation, sustainability, and progress to reinvent chemistry and advance humanity. Thank you very much. Shukran jazeelan.
On some questions and answers for both of our senior executives here, but I thought I'd point out, it's certainly not lost on me, shouldn't be lost on any of us, that the companies here represented by Jim and Ilham, of course, Syensqo coming out of Solvay, have over 200 years of history and foundations of bringing material and engineering solutions to society. And so it's on that basis that we now look forward and talk about the future. So let me start on the theme. We had a lot of conversations, a lot of mentions of technology and innovation. So I want to start on that theme. and the role that it plays as we think about the next 10 or even 20 years in this discussion. And one of the questions I'll start with is, do we have the right technology today to achieve some of the goals that we have, and specifically around this energy transition in a low carbon future? Do we have the technology today, or are there some big gaps there that need to still be developed going forward? Jim, I'll ask you first to comment.
We have some. I mean, there's a big gap. I talked about nuclear. There's a big gap on nuclear today. For nuclear to be useful for industry, one of the things we're trying to do is replace natural gas for process heat and steam. For electricity generation, I think we have nuclear answers already. But for process heat and steam, the reason we focused on X-energy was that high temperature gas reactor gives us high pressure and high temperature steam, which we can use in the industrial processes. So that's why it's so important to us. So that still has to be scaled up. So we're not quite there, but it is operating in. There's a pilot plant in Germany, there's a reactor in China that are operating. So we're confident that it can be scaled up. Mm-hmm. Next thing you've got to do is be able to do it at a cost that competes. Right. On natural gas, carbon capture is possible. You can do it today with amine stripping to get the CO2 out. There's work being done on looking at hydrogen-fired turbines for power generation. I'd say we're not there yet, mainly because we don't have enough hydrogen to really do a full-scale frame test on those turbines, and the demand for those gas turbines is out to 2032, just on the electricity needs that are out there today. So I would say we have some of the answers, but not all.
Maybe from your perspective, on more of the materials side, when you think about technology, innovation, and I'm going to throw in maybe the use of AI, artificial intelligence, to help in terms of the materials of the future that may help. I mean, you had the example of the airplane powered by hydrogen, for example, for their lightweighting and construction. So your thoughts on technology and innovation, where we are today, where we need to get to?
Well, I mean, technology is going to revolutionize the way we do chemistry. I wish I'm younger to do my PhD again and just embark with the circularity by design and AI by design. I think in our company, humbly, because we are not a digital company, we'll never be, we started, obviously, like anybody else, having our private ChatGPT. And I am a digital immigrant. I'm from, a former school. So people need to give me a business case. But it was difficult for our people to give the business case. So we started like entrepreneurs, believe it or not, in just a few months, more than 30%, 40%, which is a big number. We had people were already using ChatGPT. And more importantly, in research and innovation. And the example I gave you, and I'm sure we shared that with Jim, is going to just leapfrog. And in my old days, I used to make 100 experiments, maybe 80 will fail, and then I focus on the 20, and then I worked for this formidable company, Dow. We had high throughput innovation. But now AI is just leapfrogging. And from, by the way, unstructured data, because I represent here a company which is a 160-year-old company, we have a lot of data which we have never used. And for any CEO, any chairman or woman, it's a source of wisdom. And if you can use it to cut the waste, to cut the bad cost, and ensure that we can accelerate our path to solution, it's just amazing for our innovation. So the example you have given in aviation, we are using it both in defense and aviation. Think about it. I mean, I took a flight from London to Muscat. You can cut the greenhouse gas emission by 25% by using more composite material. So imagine now with AI, we are looking at ways to incorporate more composite, non-metallics, and bring that solution with our customers through the qualification process quicker.
Right, and I'm going to go on I'm holding the path on AI relative to energy consumption, but just to continue on this theme, is what AI does for us as an industry speed up the innovation curve? allows us to move down the path, to look at historical data. Again, 100 year of data from various companies. Is that what it actually does? And are you, it sounds like, Ilham, you're doing that in your company. Jim, are things happening in Dow where that is really what's happening, is we're speeding up getting to the false starts or getting to those new technologies that might have a chance of
I think it does that. It helps improve reliability. We have a lot of work going on with AI, cracker operations, looking at things differently than we would have looked at them before to try to detect, what might cause an unplanned event and how do we avoid that. And, and that's real profitability if you can keep a plant from going down. It's providing a lot of benefits in our legal department today in IP law. Just the heavy work of patent searches and things like that. Right. Generative AI is doing a lot of work to help sift through that and make that process quicker. I think as it gets better, we'll do more modeling. We invested a lot in high-speed throughput, AI for lab experimentation to be more successful without having to do as many experiments. But I think as you get better and you get more data in plastics today, we have more than 20 years of data on catalyst production. Right. So now you're getting to the state where you can say, I want to make a product with certain properties, and I want to make a design so that it makes a package that you could drop from 10 feet and it won't rupture. And you can do all of that through computer modeling and before you ever go into the lab. Yeah. And so you can see these examples, real-time crash tests for vehicles. Yeah. AI for, we had a partnership with Shell on looking at electric cracking furnace. Right. Would that ever be a possibility? A cracking furnace today, cracker might run 10 years between major turnarounds, and the issue really is keeping it retubed and operating efficiently. So how do you get a heating coil in a cracking furnace that has any kind of life to it, that has a good cost position, that has a material of construction that can withstand the temperature, above 1,500 degrees Fahrenheit in there, and is going to last for any period of time? It's a combination of not only looking at what we need to do, but looking at other industries. For example, aviation. Yeah. What's the jet engine exhaust on a big fighter jet? It's like 3,500 degrees Fahrenheit. So we've got to go look at different alloys and different materials to find out, can we actually get a material that makes it even possible to change that?
Yeah, please.
Another one is, for me, is the traceability of the value chain and the supply chain, Yes. I think COVID taught us that we are vulnerable. So we start looking at our value chain, at our suppliers, at, the compliance as well is important for companies like ours. So I think that traceability is amazing. From the blockchain, which we are already using for some consumer driven value chain, to actually looking at the efficiencies of the value chain in extremely fragmented world.
Yeah.
There is a bit of music here. That's okay.
Yeah. We just to take off on that just for a second. The whole thing, if we decarbonize our industries and we reduce, like our global footprint today is 35 million metric tons of scope 1 and 2 emissions. Yeah. So if I can actually reduce that 35 million metric tons, that's an actual physical reduction, scientifically provable. Yeah. Now I need to be able to audit it, trace it, present that information to a customer. You're in an environment where there's a lot of pressure on offset markets, a lot of question on the credibility of offset markets, double counting. One of the reasons scope 3 has been avoided is because of all the double counting that's involved. Sure. If we could focus on scope 1 and 2 and these actual emission reductions, those would be the highest quality CO2 emission reductions possible. If you're a brand owner that's trying to sell a product to a customer and you want to get paid for it, you don't want to be accused of greenwashing, you don't want to be accused of anything else. You need that high quality. Yeah. So I think without AI, without blockchain, without some of those capabilities, you wouldn't be able to do it.
Right. So I feel like maybe one of my follow-on questions was going to be, and I think you've been touching on it, is what we're really also talking about in parallel to advancing technology and innovation at a speed that we've not seen before. Don't we need new business models in terms of our hiring practices, our supply chain practices, the way we look at markets, the way we look at going to market, the way we develop products, the way we get feedback from customers? Are we seeing the business models evolve as well, or are those lagging? What are your thoughts on that?
Yes and no. Maybe I'll start with the no, maybe more interesting. The EV story, right? I mean, we've all believers in the EV and the hybridization. And we've seen a growth in the EV built up probably by 50% CAGR in the past year, so massive one. At the level that the EU starts banning ICE, internal combustion engine cars, and OEMs stop developing them, etc. And now you see that there are delays, less adoption by the consumers, etc. So two things happened here. I'm still a believer in hybridization, probably more than just pure EV. But what's happened is that the infrastructure didn't follow the EV, development. That's number one. So in Europe, I live in Brussels. Europeans, they like driving 800 kilometers without stopping. They do it once a year, but they like to do it anyway. So it's part of the spec. So you need those efficient batteries, right? Number two, you needed the battery used to be half of the cost of a car just a few years back, 10 years ago. Now it's 20%, and we are working on single-digit cost, right? And it's going to get there. So you need very effective, and affordable, as I mentioned in my prepared remark, innovation. If there's no affordability, you are leaving people behind. And number three, you need that infrastructure. You need the charging stations. You need subsidies for adoption at the beginning. When subsidies stopped in Germany just a few months ago, the sales stopped. And then you need a level playing field. Because in Europe, I represent a hard-to-abate industry, right? So we are greening the industry, we are greening it and using safer raw materials, competing with China. And I was in Frankfurt just a few days ago with my team, and you had a big advertisement, BYD 38K euro for an SUV pure EV. SUV pure EV. Yeah. The cheapest Tesla is 60K. So you are competing, by the way, with a very nice car, because I did my test drive of BYD in China. It's an amazing car, right? German quality, sorry to say this, but it's true. And with a very nice battery, it's actually the lowest total cost of ownership of LFP in the world. So we need to look at the mirror and look where is the best available technology, and not start reinventing the wheel and onshoring technologies or commodities which others can do it better, while we need to onshore innovations which can disrupt. And this is where we need some money.
So I was going to go to partnerships. I think one of the things that industry does that startups can't do as well is to scale technology. And when you get into the challenges that we face in plastics with recycling and circularity, of course, we don't bring a lot to the equation when it comes to collection of waste. Right. But when it comes to taking that waste and turning it into a valuable product, then I think we have partnerships that we can get into to be able to scale that to what we would consider to be world scale levels. 20,000 tons is not world scale level when you can build a 600,000 ton polyethylene reactor. So how do we get to that scale? Or in nuclear, one of the reasons we partnered with X-Energy was and you talk about business models, in the United States, the regulations around traditional light water reactors to build one drive the cost through the roof. For an industrial partner to work with X-Energy to work on scaling this up, but also to do it in a way where it can be built with a capital cost that makes our target is to make that nuclear plant be able to produce electricity and steam at the same cost as gas-fired power generation with carbon capture. If you can do that, you've got two very viable baseload technologies, and different ones will be used in different places. Not everybody will have access to nuclear. Some won't want to take that risk or to deal with it, and others will want to use natural gas. And you may be in an energy abundant economy, and natural gas is available, and that may be the option. So the reason we got involved was with our engineering and construction capability on large projects. We could work with X Energy and say, okay, you need to think about this a little bit differently in terms of how you construct it and build it for an industrial application. It doesn't need to be built the same way that a light water reactor with different specs needs to be built.
Yeah, so I think that theme of new business models is essential, right?
Absolutely.
And Jim, maybe I can turn to one of the questions that's come through. Is circularity for plastics economically feasible? The question goes on to ask, especially with the current environment, but I think beyond the current environment that we're in. Are we at a stage where plastic circularity, is there a vision of it being economically feasible at this point?
I think it is. I mean, the biggest challenge the biggest hurdle you have to overcome is you have to make waste collection accessible for everybody. We'll never get there. We're never going to go into landfills and take plastics out of landfills. That's prohibitive. Right. You need to get the waste into get it back into the circular economy before it ever goes into a landfill or a dump. So if you're working with, and waste is such a local issue, you have to work with local municipalities. You've got to come up with systems that work. If you can do that with some scale, then I think it is. I think we're headed probably down a path where it's either advanced recycling or maybe even gasification that gets us to that point. Mm-hmm. Because you want to be able to make the purity of a product. I mean, at the end of the day, a consumer is not going to buy a product that they don't have confidence in. If it's in a food package, if it's in a medical package, if it's in a beverage that you buy, if you think it might have, product that's been recycled that's not as pure as virgin material, you're going to have a question mark in your head.
Right.
So I think you're moving towards technologies that are going to make it scalable and lower cost. Right. But, one of the things you have to get there is some targets, some recycled content mandates, and that's going to mean that they're going to pay a little bit higher price for that recycled material.
Right. No, I had great conversation about the technology and the innovation. I think we're hearing that we do have some of the technology today. The innovation continues to be needed, will continue to advance. AI will accelerate that. We need new business models. And we're starting to see the advent in the area of like plastics circularity, some success in terms of how the industry can bring these solutions. And I'm going to carry on now, Jim, with where you left off, which was the consumer. So one of my next themes was when we talk about this continued, very heightened focus on environmental sustainability and evolving consumer preferences, right? So, and Ilham, I'll come to you, because I think, right, you guys, along with that, are on the forefront of what's happening in terms of consumer preferences. So whether it be automotive or healthcare or just consumer goods in general, building materials, how do we see growth from the standpoint of consumers seeing value in a low carbon product as part of their contribution, if you will, to climate change?
It's a great question, and I think Jim alluded to that. Well, for me, and maybe I'll take again the circularity as an example or low carbon solution. When I joined the company Solvay, our sales coming from circularity were around low single digit, 3%. We moved it to 13% in less than 5 years. So that's not bad. But it's, I'm impatient to see more of this. We believe we can reach double digits starting with 2 or 3 very quickly. Now the question is the business case, right? I mean, and that's circularity by design and building a business case about who is going to pay for it, as Jim said. There is a premium, green premium, circularity premium. We are almost, absorbing ourselves, right? Because we believe that it's going to take time for adoption. So where we see it happening, it's in the consumer side, the luxury segment, specifically with FMCG companies, right? People like L'Oreal, Procter & Gamble, Unilever, who are buying our products can afford to have bio-guar surfactants in their shampoo. And as a user, I use guar bio shampoo, but I pay premium for that. Now look at the car, coming back to the EV. Yeah. Do you want still to pay 60, 70K, or you go to 25, 30K, and you have an EV car? So that's offering which is available, and frankly, with competitive products coming from China and coming to Europe. So I think the innovation is there. I'm a believer in circularity and low carbon input materials in our molecules. I believe today it's a crime to have end of life. When I was a chemist, I was measuring end of life cycle. Now you need to think first usage, second usage, third usage. But second one is what Jim said, it's cheaper to put in the landfill than to recycle. This is where you need authorities. We are not policy makers. So we need number two. And number three, you need education and education and education. Yeah. It starts at home. It starts at school, you know, when tap water running, when you brush your teeth, but it starts also how we use our materials. I'm not going to throw my suit tonight, right? So we need to think about our material and our product the same way.
Yeah, I mean, Jim, any thoughts on this? I mean, at GPCA 2034, wherever that winds up, I mean, are we going to be talking about consumer preferences that have changed at that point in time? 10 years
I think you will. I mean, you see the pressures in different areas. There's a lot of pressure now on fast fashion and textiles, which, you know, low-cost clothes that are meant to be worn a couple of times and then got rid of. I think you'll see pressures like that. One of the challenges we face in plastics is that I mentioned we make products that are very affordable. You know, a plastic package for your food product is a fraction of a cent, you know, but it provides a tremendous amount of value. But when the product is that inexpensive, people don't think about it the same way as they might think about their iPhone. You think about your iPhone, if you're going to upgrade your iPhone, you take it in and turn it in for a trade-in, right? Like you would with a car. But you don't think about that with plastics. Right. You think about, you know, it's like, it's too cheap to think about. So you have to change the environmental psyche about it. You know, PET bottles are a fantastic convenience. They're very inexpensive to ship. If you replace them all with glass, CO2 emissions are not going to go down in this world, right? And the cost to recycle the glass is pretty expensive as well. So you have to change the equation. So policies a lot of times come in place to just drive the behavioral change until you can get to that more sustainable spot. And I think we're in that place in a few areas. Yeah,
great, thanks. I want to switch over now to energy transition. Here to stay, you both made that comment. And I want to divide the conversation into electrons and molecules. And so from the electron standpoint, we talked about AI and digitization as helping us advance technology. But at the same time, these massive data centers and this advent of AI, right, is competing for that green energy that those companies are committing to. And so how do you see the chemical industry that also needs greener energy, let's call it low carbon power, as a means of achieving net zero, help find that right balance of these two competing dynamics?
It's bigger than that. When you get to electrons, AI is the thing that tipped the equation, but we were already at a point where almost every electric grid in the United States was at the last increment of available capacity that it had. And data centers had been placed all over the United States in places where the grids had available electricity. That's all gone now. So now you're taking a look at data centers having to build, and they want low-cost electricity as well, just like industry. But a utility is not going to build for them unless they make a massive commitment. So there's a school of thought that all the new electricity generation capacity is more than likely going to be behind the grid, behind the meter capacity. And so you saw, like in X Energy, one of the recent announcements was that Amazon came in and made a $500 million investment in them. Well, it was to have access to a nuclear technology so they could meet their fulfillment of low carbon energy for their data centers. And Google and others have made investments as well. But I think what you're starting to see is they're looking for partners. And if the partners aren't going to be the utilities, they could potentially be industrial partners that will help them build behind the grid. And if you think about our industries,
Yeah.
your industry as well, even in the days where we used coal for power, we always built our own power because it was cheaper than paying the grid fees.
Exactly.
It was cheaper for us to build power and co-generate steam and electricity than it was to buy it off the grid. We're back into that era again. And I think that's what's driving on electrons. And of course, the demand discontinuity on electricity right now is the biggest we've ever seen because it isn't just data. We've been talking about electrifying everything. We're going to electrify cars. We're going to electrify everything under the sun. Well, you're going to need more. You're going to need more grid capacity.
Absolutely. Please,
And
your
to
thoughts.
build on what Jim said, you know, when I was with Solvay, we had still, and they have still, some plants using coal. And to decarbonize our assets as a hard to abate, I'm not an energy maker. I need energy to power my plants 24/7, 365 days a year in an affordable way. I need supply security, continuity, and affordability. But each site, and I used to have 120 sites, now I have 60 with Syensqo, needs a customized solution. Because some areas are blessed with solar, wind, hydro, biomass. I'm using biomass and waste to decoal some of my plants. Small nuclear reactor, Jim talked about. We are trying them. And you're right on the II side, because we are also a supplier to II. So it's a growth tailwind for our business. But when I look at our customers, TSMC, Intel, even the Apple, the Google are building servers, and actually now they are more and more investing in their own energy supply because they know they're going to be in competition with other sectors, all right? So you're right, and I said it during my prepared comments, the energy, play, it's going to be critical for the next years and the next decade, specifically for the hard-to-abate industry, to allow us to meet our decarbonization and carbon neutrality ambition.
Right. No, thank you both. Energy transition, low carbon molecules. Let's switch to that side of the equation. So thinking about how the chemical industry can invest to achieve low carbon or net zero, while at the same time meeting the needs of what I would call the traditional materials, which is where the bulk of the consumer demand is. It comes back to the consumers and their thinking. So, and I'll go to you first, Jim, because you seem to have solved this equation in Alberta. So how do you balance that, being able to grow to meet traditional needs, but also making that investment to get to a net zero, in your case, in terms of what you guys are looking at in Alberta?
Well, you have to have help. I mentioned in Canada, there's a market price on carbon. It's closer to the European Union market price, and there's a carbon trading system there. That helps. I mean, you're going to have a higher operating cost. Essentially, when we crack ethane, we make ethylene, we make methane and hydrogen. So we'll take the methane and hydrogen through an autothermal reformer to make pure hydrogen, and that will fire the furnaces on the cracker. So it's a nice closed loop system. I don't have to have a lot of piping and storage. It's just a closed loop system. We'll scrub the CO2 out of the autothermal reformer and take it to an existing carbon trunk line, and it'll get stored there. So I have a little bit higher operating cost, and that price on carbon helps me offset that. And I have a little bit higher CapEx cost, not a lot higher, right? So if that project is $6 billion investment, maybe you've got 10 to 15% higher CapEx to do the hydrogen part of it. Right. Okay, I can recover that maybe through an investment tax credit over time from the government for the additional capital that I have to put in for the hydrogen capacity. I think that's a reasonable balance. I mentioned green hydrogen. If I had to do it with green hydrogen, I'd have to build 7 gigawatts of electrical capacity and all the
That's
electrolyzers.
amazing.
Nobody's going to subsidize that
Right.
bill. That's
Right.
crazy.
Right.
So you look at it and you say, if you've got a logical solution like that, you need some policies that are going to help you make that shift happen. I'd say on the other side, the customers will pay as long as they have proof and they can show that they're doing the right thing. Because they are in this world, regardless of doing the right thing, you're going to get attacked by somebody, right? So the first time you put a product out there and you say it's 100% recycled or it's 0 CO2 emissions, you just wait for the lawsuits to come in, because they'll come in and somebody will attack you for it. And you've got to be able to back it up. So we've got to be able to give them a bulletproof case that it's 0 CO2. We can do it. In recycling, we do it through mass balance systems that are third-party validated. We could do the same thing with CO2. We can attribute all the zero emission CO2 to the ethylene and then use that mass balance to go out to the derivatives.
So Ilham, is that one of the keys then, is carbon pricing? And
We did it. We put an internal carbon pricing back in 2019
you mentioned that.
internally. People say you are crazy. I said, look, I debated with my board and I said, look, this is the right left pocket. Let us do the experiment. It's not going to hurt the company. And at the end of the day, looking back, it was the right decision to train our muscles and get all the investment business cases to the CFO table or my table, you know, based on twice European carbon pricing. So we went very bold, all right, just to see the sensitivity of it, right? And that's why today, frankly, 60% of our sites are already powered with renewable energy, including in China and 60% in the US. But coming back to what Jim said, we had to find the right customers. And we went into segmenting because we know we are scope 3 of our customers. The people who are saying scope 3, SBTI, neutrality, all of this, they need us to be, you know, decarbonized. So we went to those, and they helped us. In the US, for example, where there is no federal carbon pricing, we had a customer specifically in the electronics who wanted green products. So we built, we have one of the largest solar farm in the United States of America in the chemical industry in South Carolina, 700 soccer field, European soccer field, not American, but European soccer field full of solar, right? So, but you need that demand. With no demand, there is no innovation pushed through the gate, right? We need demand, we need a customer, we need that premium pricing sensitivity. And then, you know, you need, again, coming back to the intake energy, right? In some area, people talk about green hydrogen, but green hydrogen is 6, 7, 8 euro a kilo in Europe. I cannot use it industrially. Yeah. Forget it, right? Yeah, you can use it in Chile, Australia, maybe in Morocco, my native country, who are now building an ecosystem. But you cannot use it at 6, 8, right? And Jim mentioned how much energy, you know, you need. So I think all of this innovation needs time, but we need an ecosystem, we need alliances to make decarbonization happen.
Yeah, I mean, if you have an ideology that fossil fuels are evil and fossil fuels should go away, then you won't consider blue hydrogen as an example. Yeah. If your focus is on 0 CO2 emissions, if that's what you believe, if you believe emissions are driving climate change, and let's focus on the emissions and get the emissions down, we can get the emissions down a lot cheaper than we can get make green hydrogen. So, you know, let's focus on the right problem. Let's get the problem scoped the right way and solve it. And you can't, there's so many double standards in, you know, the energy transition. You can't have any waste plastics get into the environment, but, you know, how many wind blades do we go bury in a landfill somewhere at the end of life? It doesn't compute to most people. So you've got to bring it back to economics. And one of the things you'll find in the discussions is everybody wants to avoid the economics and the dollars and cents until inflation gets out of control. and then suddenly
And
the
then
economics are important.
Makes sense. All right, we're low on time, but I want to sneak in just one last reaction from you guys. We both have assets operating all over the world. Syensqo, I know 30 countries. Jim, multiple
Similar,
countries
yeah.
around the world. If you think about 2024 as significant election year, and not just the United States, but all over the world. So when it comes to global trade of your product, which has been fundamental of the chemical industry. So thoughts, and I'll ask you to be brief just because I'm watching the clock, but concerned, not concerned, moderately concerned? Thinking about the next 10 years, right? When you think about, the shift that may have occurred in 2024.
Yeah, preparing for anything that could happen. I don't think that our new administration in the U.S. wants to kill the global economy. So I think they'll be balanced in that regard. At the same time, I think there will be some challenges. As Ilham mentioned, the WTO is not working. And that was the mechanism to create a level playing field. And if a level playing field doesn't exist, then I think you're going to have some governments say, we think the imbalance is about this percent and we're going to look at tariffs.
Great. Yeah.
I share Jim's view. I said it's we're preparing for anything. And frankly, most of my company's products and solutions are made locally for local. So we're going to be impacted, but not that much. Now, wearing my other hats, obviously, we're watching. And as Jim said, we have every faith that the new Trump administration is actually going to look at not destroying the world economy, but actually competing and maybe shaking up the tree. And that's what we are talking with the European Commission as we speak. And I mentioned the Antwerp Declaration. We are happy with Draghi. Draghi now needs execution, the Draghi report. And I call it don't execute a mini Draghi. We need it in full because you need simplicity, you need visibility, to be able to continue investing in Europe. And frankly, IRA already under Biden administration has made many of us, including my company, investing more in the US. With the China, which is probably more fragile domestically, the economy is still not at the level we expect it to be, with an overcapacity, which is real, specifically in the chemical industry. Right. For one container shipped from Europe to China 2.5 years ago, you had 2.5 containers back. Now for one, you have 4 back. Yeah. So this is real. So I think we'll see more polarization, regionalization. We are preparing for it. And I think those discussions, specifically between the public and the private sectors, are so essential to support the chemical industry to continue build prosperity.
For sure.
Thank you. I'm 2 minutes over, and so thank you for continuing to engage us. Please join me in thanking Jim and Ilham for great presentations and good discussion.
Great to